Welcome to This Week in Money. I'm Jim Goddard. Today, Ross Clark from Chartsandmarkets.com runs down the major markets. He says we're about to go into what is traditionally the best week on the stock markets. Ross checks out gold, crude, and the U.S. and Canadian dollars. Editor of Rick's Picks, Rick Ackerman, joins us from Florida. He has some interesting targets for the Dow, gold, silver, platinum, and palladium. We ask him about whether trillions in AI investment will ever pay off. Founder of the Schachter.Energy report, Josef Schachter, checks in from Calgary to talk about his recently wrapped-up energy conference, the outlook for crude, and what could prompt the price per barrel to hit $100. One of Canada's most successful real estate agents ever, Allan Angell, tells us that the greater Vancouver real estate market is seeing one of its worst years ever. He says things were looking rosy for high-end properties until the Trump tariff war on Canada started. We'll talk to Ross Clark right after this.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com. Welcome to This Week in Money, the source for market opinions. Here is Jim Goddard.
My guest is Ross Clark from Chartsandmarkets.com, where you'll find insightful market commentary and timely technical analysis. You can find him on X at Charts by Ross. Welcome back to This Week in Money.
Always a pleasure, Jim.
How would you describe what happened on the stock markets this week?
Well, this is another one of those where we had our little pause that refreshes right around the first, second of the month. Got a small oversold condition, and that was a decent correction back to the 50-day moving average. Now, that's the first time that these major indices have gone through the 20-day and then got to the 50. So that takes care of some of the oversold condition. And guess what? Here we are on Friday. The NASDAQ, the S&P, up to all-time highs again. And, the key here is not so much in terms of recognizing a top or looking for something. It's working with a process. And rather than having predictions, the key is, where's the support? Has it not been? If it hasn't been violated, then the trend is up. So for now, I think you're looking at about 6,600 on the S&P, and we're sitting at 6,800 and change as we go into the weekend. Now, we are also coming into the period with very strong seasonality. When you get to the end of October, you've got historically one of the best weeks of the year. So be looking for some upside at this point. And we do know where the support is. It was on that most recent pullback. And I don't think you don't want to think about the short side of things until we start to see some internal problems. The credit side of the equation, we take a look at what's gone on over there. The high yield bonds have come back a bit here. They've broken their uptrend, but they're holding in so far. And our model that we use with the M2 money supply, the global one, would suggest that next week's a pretty good week. And maybe we get a pause after that, but at this point, trend is still to the upside.
What's happening with gold?
We got, we've been warning people on our service going into the top week there that the excess readings that we were seeing on gold and silver were really something that you don't see that often. 5 times in gold and 7 times in silver in the last 30 years have we got to the excesses that we saw at that point. And so a correction, all it needed was first day with a lower low to kick in. And clearly we saw that this week. We had one of the biggest down days dollar-wise, but maybe not percentage-wise, but dollar-wise on both of those commodities. When we look back at those previous times that have had the exuberant move to the upside, the ensuing correction takes a while. About a half of them come back and retest the high, but are unable to break out before going down and creating a marginally lower low. So we've got price levels for gold starting at about $3,900, and silver could be down as far as $40 before this corrective process is behind us. We're still looking at the 5-year cycle for silver going up into 2026. And if you take a look at the last time that this 5-year cycle was in the process of moving up, that goes back into 2020 when we had a first overbought reading similar to the one we've just seen. You got a good correction, and then you got strength again for another 3 or 4 months. So once we get this correction out of the way, we'll be looking for silver to come back to life. And, who knows how far it goes. The first objective would be the retest of this $54 high. But if we break through there, our other numbers on the upside are considerably higher than that. But let's let this consolidation or pause run its course, and we can then be looking to be more aggressive on the bullion and on the miners. But for now, the nimble traders probably don't want to be doing too much until we have the next opportunity.
What's going on with crude?
Crude has recovered quite a bit this week. We're back to $62, and at this point, that is back to resistance levels. We had been looking at the seasonals as possibly continuing down for a number of months here. So this rally that we've got up to the 62 level should have some overhead resistance, and we'll be watching carefully to see if it managed to take that out. The oil stocks, the gassy stocks, have been doing quite well. So maybe the next correction down to the low will be something that will present opportunities.
What's going on with the U.S. and Canadian dollars?
We've got this continued basing action in the U.S. dollar. It's been pretty much a sideways action this last couple of weeks. We did get up to the 99 level, backed off a bit, but overall, the double bottom since the end of July is looking pretty impressive. I think we still have potential on the upside, and if that happens, it tends to keep a lid on commodities that are priced in U.S. dollars. So for now, treat the U.S. dollar as a buoyant item. And on the other side of the coin, the currency that one of the ones that has continued to stay weak is the Canadian dollar. And if we look at it on a relative basis to the commodities, the CRB index, and the oil market, the bounce that we've had in oil this week has had very little reaction in the Canadian dollar. And you might want to, put that down to politics or the tariffs. However, the fact is that there was an opportunity now related to the CRB and crude for the Canadian to have a decent bounce. It isn't having one of those. So, we continue to look for that to trend down. There is seasonal weakness historically taking us down into January, so we'll use that as the overhang for now.
Is there anything else we should be keeping a close eye on? Coffee or orange juice?
Well, coffee's back to the old highs again, and it's for us. It hasn't been really much of a trade, but clearly it's back to 4,200 on the coffee market, it's been a decent bounce, but I haven't looked at it as a trading vehicle. The one that has been good for us has been the uraniums, which have had a decent correction in here. They, just like everything on the commodity side, got over, and the mineral side got overbought a week ago. We've seen small corrections at this point, and I would hope that we get something a little bit deeper. You took a look at the URA or CCJ, and there's probably some more downside available there. But this is the long-term uptrend, and we'll be looking for entry opportunities. And as we get them, we'll send them out to our subscribers.
Ross, thank you so much for the update.
Always good to be with you, Jim.
My guest has been Ross Clark from Chartsandmarkets.com. Find him on X at Charts by Ross. Coming up, Rick Ackerman next on This Week in Money.
Always consult your investment professional before making any investment decision. This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back. My guest is Rick Ackerman, editor of the newsletter Rick's Picks, his website rickackerman.com. Today, Rick is speaking to us from
sunny South Florida, and thanks for inviting me on, Jim. I'm still adjusting to the time difference. I was in San Francisco for about 6 weeks this summer, and I'm a night owl, so I went to bed 3 a.m. there, and of course that's 6 o'clock Eastern time, so I'm still trying to adjust. But the weather was great, my kind of summer where you really need a down parka when you go out in the morning.
Taking a look at the markets here, the Dow hit new highs again this week. Could more quantitative easing juice the stock markets even higher?
Well, I don't even think they need more, actually. Dow is currently, it's an interesting place today as far as I'm concerned. It's stalled at 47,306, or right about, and that happens to be the midpoint hidden pivot of a big pattern that projects as high as 49,161. So we could still see an 1,800-point rally in the Dow, provided it gets past this 47,306 decisively.
Gold, silver, platinum, palladium all hit new highs and have pulled back since. First, gold. Does gold look like a short-term or long-term top, and do you have downside targets?
I think it's already corrected. I've been very bullish on gold. But the night that it topped last Thursday, I was looking at the small charts and saw kind of an overshoot on a minor corrective pattern. So I projected downside to 4020. That hit the low so far within a single point, and I've got the prospect is there that was it. That's as bad as it's going to get in gold, although it is having a little trouble getting off the launching pad following this correction. So I've got an outstanding target of 5020 on gold. That would be basis the December contract. It's currently trading 4159. So there's plenty of room there.
Silver.
Silver, I've got a bigger number up there around 55. Silver currently basis to December is trading at, around 48 bucks, or let me just check on that. It's, $48.71. So most immediately though, and I'm talking about within the next 2 to 4 days, I've got a target in silver up around, 5183. So we've got some room there, a few bucks, rally room.
Platinum and palladium, short-term or long-term tops, and do you have downside targets?
Well, I finally did look at them. We've in the past I've said, well, I've got no real interest in platinum or palladium. but it always seems to be a concern on your end. So platinum currently trading around 1633. That would be basis the, I think, December contract, has an outstanding target of 1855. So we've got some room to go there. I'm sorry, that's basis the July contract. And the palladium is interesting. It's really coming off a bear market bottom and hasn't had nearly the momentum of platinum. The recent spike in palladium fell just a hair shy of a 1,729 target I would have given you at any point in the past. It's currently trading around 1,500, and believe it or not, palladium has the potential to get as high as 2,644. I doubt that, and I'd say don't get excited about that, because palladium would first need to blow past that 1729 target that it missed on that last spike.
How long could the artificial intelligence bubble last?
Well, we all know that it could last until tomorrow, really. It's ready to pop at any time. And I don't see a way. You know, there's a headline out there in one of the legacy media pages that said was talking about the possible $1 trillion bubble that exists in AI. The only problem with that headline is that it's not a $1 trillion bubble. It's more like it's got to be a $4 or $5 trillion bubble at this point, because it's got tentacles, and every trillion that gets thrown at AI spawns a lot of smaller companies and supports bubble prices in these companies that just have a tangential connection to AI. And of course, even my newsletter, I'm now all AI all the time. Ha ha. So yeah, I don't see a way, partly because nobody's making any money with AI right now except little bits and pieces. So I don't see a way that these trillions of dollars that have been thrown at it already are going to pay off. In the first place, every advancement of AI implies fewer jobs. It's a job killer, an absolute job killer. And even though I do believe that there are miraculous possibilities with AI, such as the proverbial cure for cancer or what have you, it's been hyped to the moon, and there are going to be a lot of disappointed players in the game and also investors. So, in the meantime, I'm just kind of enjoying my Chat GPT, but I don't see all the uses that are going to come from AI that have the kind of revenue streams that will repay the trillions that are getting thrown at it now.
Would it be fair to say that AI is just the next level of programming with the emphasis on programming?
Supposedly all the coders are getting laid off, but apparently not really, because when they've got AI writing code, they have to police it. It does make errors. Mm-hmm. So you need kind of a supervisor. But I'll mention that the supervisor who used to watch the self-checkout lines at Costco has been laid off, and they've swapped out the self-checkout for the old style cash, let's call them cash registers, just the scanners. So I don't know. That's one place where AI has kind of lost a step. And if you've ever struggled with a McDonald's kiosk, you can hope that if you eat at McDonald's, that maybe someday that'll disappear too.
Now, Amazon says it plans to lay off 600,000 people in the U.S. over the next 2 years and replace them with robots, mostly in warehouses, to save $12.6 billion in labor costs. If AI turns out to be a huge job killer, where will the laid-off people be able to find work?
They won't really, and their best hope really is that Bill Gates' idea that we start taxing robots has been implemented by then. It's not that I'm a fan of Gates, but it's the one thing that he said that makes sense. That if the Amazons and everybody else are going to start replacing humans with robots, we better start taxing the robots, because there's no other way to support the people who'll be laid off. And, it's interesting. When Amazon says they're going to do something, they're going to do it. But if you you kind of extrapolate you play it forward a little bit about Amazon eliminating huge numbers of humans, it brings you to Trump's idea of reshoring American manufacturing. He's always, and I think it's let's say at the theoretical level, a good idea to bring manufacturing back to the U.S. But the fact everyone, and I mean everybody, is ignoring is that, and the Democrats are not smart enough to throw this point at him, but in order for the U.S. to become once again competitive in manufacturing, it would necessarily be with plants that don't have humans in them. So even though Trump gets away with talking up his reshoring game, it doesn't have a good end game really, because we'll be doing, the auto manufacturers like Amazon are going to have they're going to be cranking out cars with almost no human inputs, and that's not to say, I mean, I don't see a bright future for GM and Ford. You can see that the Chrysler, what was once Chrysler, that whole complex involving Italy and maybe France, but mainly Italy and Chrysler, is someone at the top suggested we may have to break this company up. But there's a possibility that Musk and the Chinese will be the only producers of cars somewhere down the road, which brings me to another thing concerning AI, which is Musk has got a pretty good handle on it. And when I asked the rhetorical question, who the hell is going to be making money with AI, Musk may be the only one. And it's only because he's integrated an AI strategy across many sectors. One of them, of course, is robo-taxi. And when robo-taxi and robo-truck get going in a big way, you're going to, you're going to see Waymo, Uber, and Lyft. They're all going to go out of business. Musk could put them out of business in 6 months if he wanted to, but I think he's just sort of cutting his teeth, developing his chops in preparation for that day. But Musk is going to be the big winner, and if the shareholders don't vote him his $1 trillion package, they're out of their minds, because it's all on the come. It's all incentivized. He's got to produce to get that $1 trillion. But when the Delaware courts tied up a seemingly generous package of, I think it was $53 million for him, in retrospect, he has absolutely blown away his targets for getting paid at that level. So when Musk says he wants $1 trillion, believe me, he's got ideas to produce a multiple of that in revenues.
Yeah, one thing I wish Elon would do is to develop a 4-engine turboprop flying boat, fire tanker to fight our massive forest fires that happen everywhere around the globe every year. As we used to have the Martin Mars in Canada, and that's been retired. So we need some big, massive water dumping airplane that can refill in 20 to 30 seconds from the nearest fresh water source. I wish he would get into that.
Yeah, I think you have to put that in a suggestion box. I know when the smoke jumpers get out there and the planes drop their payload of fire extinguisher, fire retardant, it's very energy and labor intensive. You can't get an aircraft big enough really to put out enough of the fire.
Yeah.
So yeah, I think if there's an answer there, Musk will be the one that can come up with it.
Yeah, the Martin Mars dropped 6,000 gallons of water. It's 6 to 8, depending on how far it had to fly. It's the equivalent of about 8 to 10 fire trucks just letting go at once. Tanker truck.
It's not much.
And puts out 4 acres of fire at a time.
Uh-huh.
So that's massively
that's
effective.
Not enough.
Well, just a documentary about the Martin Mars. It's hired by Mexico for 3 months to put out forest fires. It came back to Canada after 1 month because all the fires had been put out. There's too much money to be made fighting forest fires for them to want to have efficient aircraft. They've replaced it with little sky tractors that are crop dusters that drop 820 gallons. The water evaporates before it even hits the fire. They drop the same amount of water as the original water bomber, which was just a beaver float plane emptying its pontoons. So, yeah, if people across the U.S. were affected by Canadian forest fire smoke, and here in Vancouver, the forest fire smoke came up from Washington State. So it's in the best interests of all of our health to have some way to efficiently fight these fires. And again, Elon, if you're listening, please get involved in that. I'd love to work with you on it because I've done a lot of research. Anyway, could AI be used to trade markets, and would it likely make money?
Well, it can certainly outperform any portfolio manager on Earth, and I think there are even enough believers in that it should become a viable means of offering portfolio services. The portfolio managers themselves should not be comforted by AI because really they tend to underperform the S&Ps to begin with. But I think AI could get you closer to par. It could pull up even with the S&P simply because it would be at some point dominating the S&Ps with trading strategies. So as far as actually trading, though, speaking as a trader myself, it's not even 3-dimensional chess. It's more like 4 or 5-dimensional chess where you're in Einsteinian chess with with time as one of your dimensions. So no, I don't think AI could probably do as well as any algorithmic trading solution would do, meaning it can work for a while, but if it works really well, it's going to tend to crush its own edge. That's what happens. So AI, let's say the horizon for trading and with an AI brain is limited, I think.
In the U.S., we're hearing of small banks and lenders that are in trouble. For example, auto repossessions are surging, reaching levels not seen since 2009, with 1.73 million vehicles seized in the past year. And most of these small banks and lenders deal with things like auto loans. Do you think troubles like these could cause problems for the big banks?
I used to think so, but when you look at the numbers here, the auto business is small potatoes. I mean, there's no question that we were getting ourselves in trouble when the auto leasing business kind of opened up to everybody, and the whole function of auto leasing since the good old days when businesses lease cars for economically viable reasons, but that long ago went by the wayside, and everybody leases cars simply because it gives them the ability, it enables them to drive more car than they can afford. And this was a natural direction for our credit-based economy to turn when the housing market was kind of hawked to the limit. We'd found every feasible buyer of a home by the time the great crash of 2007 and 8 occurred. So the smart guys looked around and said, well, how else can we get people up to their eyeballs in debt? And the idea was to sort of scale down the whole universe of housing credit and make it credit for cars. So all kinds of trailer trash gets out of these $130,000 Mercedes-Benzes, at least as far as I've observed in parking lots. So everybody's got a Mercedes-Benz now. And but if you look at it, the numbers that are involved, like let's say half the lease deals in this country for cars collapse, it's still a drop in the bucket compared to the numbers that get put up in phony, what I call the phony wealth effect. And I've explained that 10 times in my newsletter, how when a stock like, it's even a $4 trillion company like NVIDIA, when there's earnings news, it doesn't matter whether the news is good or bad or whatever. In a bull market, all news drives stocks higher. So NVIDIA, $4.5 trillion now, when the news is announced after the close and the stock opens on a gap 25 points higher the next day, that's the same as creating, let's say, $800 billion worth of phony wealth. So we're creating such enormous hot air wealth in the financial sector that the economy can easily absorb 3 million car repossessions, no problem. The only problem, that was the good news. The bad news is that when things turn down, they're all going to come together, so that NVIDIA will come down and crush those air pockets that it made on the way up, and the same thing will happen with our other $1 trillion plus stocks, including Apple and Microsoft, and it's going to make everything that seems manageable, and I'm not talking just about the car business, the car leasing business, but I'm talking about Medicare and Social Security, all the things that we're somehow managing now that are bankrupt. If you play them forward 10 years or 5 years, they're going to collapse. We're going to have, that's what a deflation is going to be all about. That the expansionary mindset that allows people to buy stocks now, thinking tomorrow is higher and it will never end. Everything's going to come down together. And of course, there is no, in the stock market, there's no buyer of last resort, because the redemptions are going to cause all of the institutional holders of stock, and I'm talking about some of the biggies there, like the insurance companies and CalPERS, they're going to be turned into sellers because of redemptions. And when CalPERS and Fidelity and the biggest investment firms in the world turn sellers, you tell me who's going to be out there buying them. I know you and I can scoop up the bargains, right?
Mm-hmm.
But
that's what we have to wait for. Yes,
right. That's coming, and yeah, I've been guessing wrong about when for a long time, but there's no getting around it.
Thursday evening, President Trump cut off all trade negotiations with Canada following television ads run by the Ontario government, sponsored by them, but run across the U.S. on the major markets. The ads included audio from a 1987 radio address by President Ronald Reagan that said high tariffs inevitably lead to retaliation by foreign countries and the triggering of fierce trade wars. Then the worst happens. Markets shrink and collapse, businesses and industries shut down, and millions of people lose their jobs. Could Canada, the U.S., and Greenland form a zone like the United Kingdom to maybe counter things like this?
Well, everybody's kind of trying to counter everything these days, and even your Canadian leader, and I have to confess, I'm not very good on names.
Mark Carney.
But Carney, right. Yeah, well, he was saying the other day, I think he was out there with an unprecedented evening newscast. He made a speech in the middle of your primetime television that basically said, look, I've got a plan, and we're going to do everything we can to be less dependent on our exports to the U.S. We're going to start forming alliances with other countries, and we'll be able to make a more strident response to all these Trump shenanigans. So I wish him good luck, really, because the whole world is on a kind of beggar thy neighbor standard, and if you're going to pick up business somewhere, some elsewhere is going to lose business, and it's not like consumption of goods and services is expanding. It's really only credit that's expanding, and the only people doing the buying are that 20%. There's no limit to how much they can buy, and so anyway, Carney is already trying to think himself out of the traps that Trump has set, but I don't think there is a way out.
Well, Mark Carney has gone to Asia. It's his first trip there as prime minister, and of course he said he's going to be looking for new markets, and he won't be watching or going to any of the World Series games.
Well, it reminds me a little bit of Churchill when Stalin and Roosevelt were kind of negotiating their own split on the take from World War II, and Carney will get a good hearing over there in Asia, and they'll smile and say thank you for bringing these proposals to us, and behind the smile, though, I mean, they just want to beat him to death, the same as they do all other Western exporters of goods. So Carney can make friends over there, but don't have any illusions that it's going to result in doing a lot of business with the Chinese.
Well, of course, I mean, Canada and the U.S. have been best business partners since day zero. And, I mean, it was only in the 30s, I think, we started, doing tariffs and border controls. It was just free flow back and forth. I wish it was like that again. I really do. I wish that border wasn't there. But Canada stay Canada and the U.S. stay U.S.
Well, we're all wishing for the old days.
Yeah, I know. Everybody does. And they weren't as good as you think they were. How much wealth do you guess is tied up in cryptos? And could it just disappear with one solar flare?
Absolutely. I think the number I saw most recently was $4 trillion. Crypto is a $4 trillion medium now, and you've come a long way, baby. I can remember the days when crypto was in the pennies. So and you put all the cryptos in the world together, they wouldn't fill a milk carton. That's still true. You can take all 4 trillion cryptos and fit them into one milk carton, but I'd use that word wealth. How much wealth is tied up in cryptos? You got to put that word wealth in quotations marks, and people who think that in the collapsed state of existence we're going to have when the financial system fails and we have a bear market and everything comes down, as I was describing earlier, the people who think that the last men standing, the last store of value will be cryptos and gold, they better get that right before it happens, because only one of those things, one of those stores of value is correct, and that's gold. And you've always asked me the question, where should your money be? Where should you be putting it? And I haven't really wavered in years. It's always the same thing. It's bonds and bullion, and the bonds are certainly starting to go, not for any reason that was apparent at the very beginning. When bonds took off from the bottom, you could have guessed why, and it's still hard to guess why. Or bonds, U.S. bonds have done well for the paradoxical reason that even though everything Trump does is crushing the dollar and bonds, his mere stature as the only global leader worth listening to, other than Putin, let's say, is causing a flow of money into bonds. So for all the crushing of the dollar and the credit blowout that Trump has obsessed over, that he wants. He's created, just by being a forceful leader, an offset in the form of U.S. bond buyers from around the world. But and that's the one thing. When things really start to collapse, everybody's going to be favorably disposed toward that piece of Trump, which is U.S. bonds. You can own a share in Trump by going out there and buying treasuries, T-notes, T-bonds, and even bills. So I still like bonds as a place to be, but they're not popular yet. But people are starting to realize that the rally in T-bonds is for real, even if none of us can guess at the reason. So it's kind of a fledgling rally. We came down in TLT, which tracks the long bond as an ETF proxy. It was selling up around 180 when COVID hit, and of course the recent lows were down near 80. So we're only at 91 on TLT. So the bond rally is just kind of tentative at this point, but I think it's for real.
Rick, anything else we should be keeping a close eye on right now?
Your wallet, so to speak. I'm thinking that maybe this really is the top for the market. It's hard. It's obviously hard to see in days and weeks that we're getting, where it just goes up every day relentlessly. But I do have a target in the E-mini S&Ps at around, let's see, where was I thinking? They're currently 68.35, and I do believe they'll get to a minimum 69.25. But I could also, if they blow through that number, 75.32 is possible. And that would correspond to, when I look at a monthly chart of the E-mini S&Ps, I could see it as high as, 73.52. And that would be, let's see, that's a 500-point rally from here. It's as high as I could see, really. I'm looking at a monthly chart, and it just it ends there. I don't see anything possible above that, at least not without a good correction. So we could still have a 500-point rally in E-mini S&Ps, but just as a precaution, I'm looking much lower than that for just 69.25, which is just a hop, skip, and a jump from where we are now. So I've got 1 foot on the fire escape, as you could say, and I'm just ready for the exhaustion of Trump mania.
Rick, where can people subscribe to Rick's Picks?
Well, I'm glad you asked, Jim. They can go to rickackerman.com, and I do offer, if you go up top, click the free trial offer. You get a couple free weeks, I think it is, and come in the chat room. I've been blowing the pips out of the ace of spades for I've had a hot hand lately as far as calling the swings in Bitcoin, the E-mini S&Ps, and bullion. So you come in the chat room and ask around the neighborhood, and I'm sure you'll enjoy the show. So again, rickackerman.com, and just take the free trial offer.
Rick, thank you so much for being on This Week in Money.
Always a pleasure, Jim. I certainly appreciate the invitation to come on and connect with your vast audience.
My guest has been Rick Ackerman, editor of the newsletter Rick's Picks, his website, rickackerman.com. Coming up, Josef Schachter, next on This Week in Money.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com. Week in Money is archived online at talkdigitalnetwork.com.
Welcome back. My guest is Josef Schachter, founder of the Schachter.Energy Report online at Schachter.Energyreport.ca. Josef, welcome back to This Week in Money.
Oh, it's great to be with you again, Jim.
Can you give us a quick look at the Schachter.Energy Report and how our listeners can subscribe to it?
Yeah, the Schachter.Energy Report, it's www.Schachter, Schachter, energyreport.ca. And it covers the macro side of the oil and gas side, and then we also cover 33 companies, from the energy, domestic E&P, international E&P, Canadian companies working overseas, and the energy service area, and some royalty income companies. And, we had a very successful conference on the 18th of the month at Mount Royal University. We had record individual investor attendance, so very, very successful event, still getting people calling in about it. But we had, as part of that, we had a special offer, a conference discount, which goes till October 31st, so people have a few days to take advantage of it, where we had the annual subscription at $150 off the regular $9.99 for $8.49 plus GST. So people can just go to the website, Schachter.Energyreport.ca, go to the subscriptions area, click on the annual, fill out all the information, your email address, where you live, all the rest of it, and then it'll look like it's charging you the $9.99, but then there'll be a box saying promo code, and you put in capital letters BGA, a black gold annual, BGA 25. I'll repeat that, BGA 25, and it'll take the $150 off. And you'll have access to our product. As you know from our discussions, I was talking about, inventories being a little high, before winter, and we thought the price of oil would get below 60. We got down to, $57. We had the bump up in the last few days because of new sanctions by, the U.S. government on the Russian Rosneft and Lukoil. So the price of oil was up 5% on Thursday. So we're looking at, a bit of a bounce here, but I think that in the end, just like over the last 2.5 years, all the sanctions that the EU have put in or the U.S. have put in, there's always a workaround. Russia figures it out. They were thrown out of the SWIFT system, for, in terms of transactions and insurance. They're now working with the Chinese, and they have a workaround. So, right now India is saying, we'll be good. We won't buy, Russian oil. But in the end, the ships can change the transponders. They can say it's Malaysian or Indonesian crude, mix a little of the local crude with Russian crude, and, and then all of a sudden you've got yourself a cargo that can be sold. So I think that today's action, Thursday's action was a little, excessively optimistic, and I think we're going to back off again below 60. And I think that, we will see a bottom sometime during Q4, probably December. And I think we're going to get a buy signal then. We had three checklist items, if you recall. One was the price of oil below 60, which of course we did get over the last few weeks. Second was the S&P TSX Energy Index to get down below 240, and it's in the 280s right now. So, a bit more to go there. And then the S&P Energy Bullish Percentage Index, which we said would get down below 10%, which is a buy signal. It was 90% just a month ago, and just a few days ago, before this bounce in the last few days, it was at 50%. So, 41%. So it's coming down, and we think it's going to get to below 10% during, November, December. And if we get all three in, we'll have the checklist of a buy. Just like we had in April, and we said it's a table pounding buy situation, and of course the stocks did extremely well that we that we talked about and which we cover. So I think we're going to see another very good run, and then I think 2026 is going to be a very, very good year because demand's going to grow 1.3 million. Yes, there'll be more production from Canada, Guyana, Brazil, Azerbaijan. But people have to remember that there's 5 to 6% depletion, and the industry is not spending enough money which means you got to come up with over 5 million barrels just to stay still, and they're not spending enough money to do that. So when you hear Guyana, Canada, Azerbaijan, Brazil, they're not going to offset that decline rate, and you're seeing more and more reports talking about U.S. spending at these prices insufficient to replace declines, and the U.S. is really the most active driller. You go into some of these OPEC countries, they don't have the money because they're using it, for government expenditures, for the military, for graft, and so to me, I think when we get into the winter 25, 26, we'll start seeing some improvement. And then I think 26, we're looking at an average price between 70 and 75. And the second half of the year, I think we'll see an 80 handle. So I'm saying, don't be bearish here. Wait for the next buy signal. And, we've been talking to people about being 80% invested, whatever your appropriate weight is for energy portion, 80%. We're going to be telling people in December it's time to go to 100% because we expect a very, very good 2026 for the energy sector.
Your energy conference in Calgary was this past weekend. What were some of the big takeaways from it?
What was interesting to me was the commentary that everybody sees second half of 26 is optimistic. Not so much with the price of oil. There's still, many of them saying $60, $65 when they show their, outlooks for 2026. But what they did say was that there's a lot of interest now from European investors in the sector, so they're coming in, knocking on the door. The Americans are still, hurt because of what's going on down south, and they're not showing any growth in their Permian or Eagle Ford or whatever. And then we're seeing a big opening where individual investors have said that, they're comfortable with resources. They've made money in, gold and silver in just think about 2025, or, the performance of the gold and silver stocks. And you remember in 2024, gold was moving, but the stocks didn't wake up. All of a sudden in 2025, you've got 5 and 10 baggers in many places. So it's been a very, very rewarding area, even doubles in the big caps. So people are now saying, well, what in resources are cheap? And how can that change? And they say, well, look, energy will change at some point simply because there's not enough money being spent. And every year demand grows between 1 to 1.3. And we're looking at probably, this year 1.2, next year probably the same, and the industry is not bringing on enough production to meet that increase. And so I'm looking for, maybe 60s in the beginning of the year, but to sit into the 70s because when you have cold weather, and then I think you'll be looking at much higher prices in the second half. And if that's the case, companies are trading today on today's commodity price 2 times cash flow, some even less. And, if we get into the, 80s at the second half of the year, people will start playing 3 or 4 times cash flow. Usually at the top of the cycle, when we have $80, $90, $100 oil, as we saw in 2008, companies traded at 7 and 8 times cash flow. So there's a big move here. And cash flow goes up as the price of the commodity goes up, and as volumes go up, production goes up. So that's why we're very optimistic that, our sector, while it's not a positive performer all the time, when you have these commodity resource super cycles and energy being the biggest component, things can be really good. 74 to 81, price of oil went from under $3, 2.5 to 36. 1999 from under $11 to 147 in summer of 2008. So, when you have these super cycles, they all kick in big time. And a lot of it is driven by new demand. So in the 70s, it was Japan, selling us Datsuns and Panasonics and Sonys, and they used a lot more energy to get us to buy all those things, to make the things we bought. And then 99 to 08, it was China coming out of the gate as capitalism under Chinese Communist Party umbrella. And this time, I think it's the emerging world where we're going to need rare earths, we're going to need lithium, we're going to need copper, we're going to need nickel. A lot of that's going to have to come from Asia, from South America, from Africa. And as we develop those mines and the people working in there have good standards of living, everybody is going to be using more energy. And that's, I think, is going to be the driving force in this cycle.
Crude oil seems to be rebounding off a bottom at the same time gold is pulling back from a top. Is there an ongoing correlation between crude and oil, or I should say between crude and gold?
I really don't see that. I think each one runs for its own reasons. I think gold is running because of the amount of debt in the system globally, and also the fact that the debt load and the interest cost of it is hurting governments. Some people went into crypto as a way to get away from that. But gold has historically, for centuries, thousands of years, been the liquidity. You can take gold coins and gold bars and, you can go from place to place and you've got an economic value. Right now, is the strongest currency in the world is the Swiss franc. The euro's had a little bit of a bounce in 25, US dollar backed off. But if we have any problem geopolitically, the US dollar usually benefits, and, we'll see what happens in 25, 26. Is it going to be China go after Taiwan? Is the Ukraine war, Russia and Ukraine, going to settle or get worse? Is there going to be other, Venezuela? U.S. is going to invade Venezuela or blockade it. So again, gold is when you look at it compared to the debt levels, compared to other things, gold getting to 4,000. You're seeing a lot of people saying that just to cover the debt of the United States. Forget about the rest of the world, which is big. We may see in the next few years $10,000 gold. I don't dispute that because I just don't know enough about it. But going to crude oil is very cheap. It's below a lot of countries' cost of production. Anytime you find a commodity trading below its cost of production, and production costs can't go down very much, then you end up having the ingredients for a major cycle. Because, if demand picks up, you can't bring on new supply very quickly, and you have to have the economic incentive to do it. And then you got to build the infrastructure, pipelines, all that stuff, which takes a long time. So these cycles get longer and longer. 74 to 81, you can see the timeline. 99.08, the timeline is longer. I think this one was 2020, and I think it's going to go into the 2030s simply because, we're 2025 now. And people still don't realize we have a pinch point in 26, and then it takes time to fulfill the demand that comes from that, and that takes years.
Natural gas gapped higher this week. Could this be a response to gold or seasonalities?
Well, we're heading into winter. That's the seasonality that matters, not gold. We got over, $4, for the price in the U.S. $3.50 for the U.S. And Canada. After being soft for a long time, is now lifting over $1 for AECO. As we start seeing drawdowns and as LNG Canada starts taking down, they're less maybe 600-700 million. They're going to get to 2 BCF by the summer of 2026. That's going to be a big draw, and that's going to drive the price higher. I think we're going to see, $3.54 U.S. gas for NYMEX, and I think we'll be looking at $2.53 for AECO in 2026. So between that and, $75 average price for oil in 2026, cash flows will rise significantly, and that's going to be the driver of stock prices. And my expectation is that, the average stock will go up by 50% between now and the end of 2026. And if you buy the right names with the right management, right balance sheet, right prospects, and they grow production, then you could see some that could be doubles or triples. So you've heard me before being cautious, and now you're hearing me say there's a lot of reason to be optimistic here and a lot of money to be made in the sector.
Is the U.S. government shutdown likely to affect energy consumption or market prices?
Well, it'll affect energy consumption because of all the people that are laid off and don't have money, and the fact that we're going to see more and more layoffs if this drags out. The Democrats see this as a potential winning issue for them. as the left wing of their party takes control of the Democratic Party. And on the other side of it, you've got Republicans, and you've got Trump looking at it, saying, "Look, the government is too big. It does too much, and we've got to get back to saying, okay, what's appropriate for government to do? How do we live within our means?" So, like the U.S. government is spending way more than the revenues coming in. How do you get and during the Biden years, the expenses side went up significantly. So, what are we going to do to get the government, to live within the amount of money that's being brought in the door? And you look at the deficits that are happening right now, even with the revenues coming in from the tariffs, the U.S. has got a $2 trillion deficit, and those numbers aren't going to get smaller. And they've got problems where they have to fix healthcare because the population of the United States is aging, and so how do you handle Medicare and Medicaid? The federal and the state issues, and then you have education issues, and you've got all the migrants that came in illegally and illegally, and all of the government expenses for that. And then they're spending a lot more money on defense, between the support of Ukraine in the war and the desire to have, using, robotics, for ships and for, for drones and all the things they want to do militarily. They want this dome situation, which is going to cost a lot of money. So the reality is government spending is way out of control. And part of it is, of course, they gave that, $5 trillion tax cut mostly to the wealthy. But that could have solved the problem if they hadn't have done it to a great extent. But we're looking at $2 trillion deficits into the future until at some point the bond market vigilantes say you're not paying enough for the risk we're taking, and that's when you see interest rates go up, and that's when I think we did have the day of reckoning where Congress finally realizes spend doesn't solve the problem. You've got to live within your means just like most households do.
There are concerns over small banks and other lenders in the U.S. Could this be the canary in the coal mine for a debt bubble in trouble?
Yeah, we saw two, lenders to the auto sector and being involved in the auto sector, fail and go into bankruptcy. Regional banks are the ones that lend a lot to the auto sector, auto loans, and we're seeing the highest number of recoveries of cars where people haven't made their payments, and so that's becoming a problem. And just the whole budget process. How do you handle the mortgage costs, your food costs, your rent costs versus mortgage, and then your car and food, and middle Americans downward in the economic ladder are having a problem now. So I think regional banks, where they've lent a lot to commercial real estate, which is undervalued, they've been throwing bones to them to send it into the future by extending term or giving them a time to pay, add the interest to the loan, because they don't want to take the hit to their books. Well, at some point that's going to happen, and just like we saw the banking crisis a few years ago, we're going to see the Federal Reserve and the FDIC have to get involved in saving more banks, forcing mergers. That's going to be a bit of a scare. And as you said, the canary in the coal mine. If you start seeing parts of the economy showing the wear and tear that the middle and lower incomes are facing right now, the market and the economy is running on the top 10% of Americans who are wealthy, who have the wealth effect of a higher stock market and the AI and M7 and all the rest of it. We saw Tesla show some disappointment this week. If we see more disappointments as we go through, and people start seeing that the AI spend, which is helping a lot of companies, who are, say the chip manufacturers, but if you're at the people using the AI, paying a lot for it, and you don't get the benefit, and you don't see the economic benefit, or at the same time you see you're laying off massive numbers of employees, which also hurts which will hurt the economy. That's all part of the reason I'm I think that there might be a little bit of a hiccup here during Q4, where the market just realizes there are some problems out there, and the euphoria, the gambling instinct high, leveraged ETFs, people buying, the coins on, aggressive margin, put up $1 or $2 and borrow $8. That's the same kind of stuff we saw before 1929 and much worse than before 2008. So I think there's reason to be concerned in those high-flying areas, and that's why, we've told people to have cash in the energy sector, because if we get another, general market pullback, then energy stocks will get dragged down because of the margin calls. You sell what you can, not what you want. And as the margin calls are met, that's going to be a great time to buy top tier, high quality, very, some of them with very high dividends, 7, 8, 9% yields with good balance sheets. And that's the attraction of the sector right now, is companies can take the approach that we have free funds flow, even at today's commodity prices, if we're efficient, and we can use that to pay down debt. We can use it for normal course issuer bids, buying back stock, and we can use it to pay dividends. And, we polled at my conference people to say, do you want your companies to just do stock buybacks? Do you want them only to pay dividends, or do you want them to do both? And the majority of hands went up. We want you to do both.
There are concerns that Aboriginal title may override Crown title to all land in Canada. All land would include the energy sector. Should we be concerned?
I think this goes all the way up to the Supreme Court. And, this is something where, you may want to do to help those who were abused or taken advantage of. But, it's like what we're seeing now with reparations for children or grandchildren or, generations later of slavery. So, that's why I think this goal of bringing the First Nations in as partners, owners, also, being involved in, the construction of the projects. That's how we can handle this without, going into this. And if you say, it's going to go, to the Supreme Court, I don't really think that there's going to be much change. I think the system that we have, where we're moving to right the wrongs, is probably the right way to do it, rather than to go and call it one title or another.
There's talk that the November 4th budget will not pass and will be into another election. Would a budget failure be good for the energy sector and the Canadian dollar?
Let's talk about the budget. He's talking as his press conference did on Wednesday, a bone here, a bone there. He needs to get the minority parties to support. The Bloc is going to say, what are you doing for Quebec? And if he doesn't give them enough bones, maybe they support a PC non-confidence motion. So there's going to have to be some goodies for everybody, so that the budget does pass. If for some reason it does not, then I think you go into an election. I think we're seeing from the polls that the Conservatives and the Liberals, from a party point of view, are polling the same. But when it comes to comparing the leaders, Carney versus Poilievre, people are saying Carney by 20 points. So, will we look at another minority government after that? I don't know. For the energy sector, it's going to be the global situation. Are we going to have rising demand in 26? Is there insufficient funds being spent to replace declines? Energy on the oil side will be based on global issues. On the natural gas side, it's a more of a continental issue. Does it get cold, and do the Americans import more Canadian natural gas? Do we get LNG Canada running to 2 BCF? Do we get more projects approved, FID'd, final investment decisions, and then they move ahead into 28, 29? So all of that is a difference. On the Canadian dollar, if we have prices of oil move to $75, $80 in second half of 26, I think we could be looking at an 80-cent Canadian dollar. On the other hand, if we see back below 60 and we have a political problems in Canada, and another election, and all the concerns, that Carney goes to the left, to placate Ontario and Quebec, and who cares about Alberta and Saskatchewan? Then we could see the Canadian dollar break 70 cents. So you could argue a bullish longer term.
President Trump is moving forward with a real war on drugs. Any thoughts on how he might go ahead with cleaning up the narco state known as Canada?
Ooh. The war on drugs is serious. A lot of it is still coming through from the southern borders, not so much from Canada. But we are a problem on some things, going from, coming out of the ports of Vancouver, coming through parts of Ontario and Quebec, First Nations lands, and, and of course the lakes, transferring stuff across the lakes. So there is a problem, but the big battle now, you saw that, two vessels with the drug vessels or narco vessels were attacked on the Pacific side, on top of, the things that have happened on the Caribbean side. They've moved a lot of, weapons and material and soldiers and Navy and special forces. And then, Trump in a meeting, the press interview said, we're letting the CIA loose in Venezuela. And we got $50 million reward for the capture of Maduro. So if you remember, we did, the Americans did go into Panama and take out the leadership there for their narco state. So the Americans have a history of doing it, and they're gearing up with the military in the area and taking action. And so this is pressure on Venezuela, and of course their sponsor and supporter, Russia and China. And so, it's a pressure point. Again, I think you could argue it may even be to get Putin to the table on Russia, knowing that potentially, Venezuela, which is part of the group with Iran and China and North Korea, all of a sudden they could be a change in regime there. And if they did, that would be, their entry points into the U.S., be it Cuba and Venezuela and Nicaragua. They won't have something that close and that much of a potential problem for the U.S. The Monroe Doctrine, as we all have known for, the history books when we went through that. The Russians have a problem on the other side. NATO came through Germany, into East Germany, and then, Hungary, Poland, all the countries, Romania, and so, they have, a concern because they have been invaded many times from the west into Russia, and, the NATO border has come right to their border. So there's a lot of nervousness here, and Russia in retaliation has said, okay, look, you're breathing down our neck and making us nervous. We're going to have something in your world, so Cuba, we had the Cuban Missile Crisis, Venezuela, you've got, Russian troops, Russian advisors there, Cuban advisors there, keeping Maduro in power. So, and Nicaragua, of course, very left wing and part of the Russian world, politically. So, I'm thinking that the geopolitics could get worse in the near term, this move against Lukoil and Rosneft, to push Putin to the table. There's been a lot of reports coming out today that Putin's already working on workarounds so that countries can buy their oil. China and India are their biggest buyers, but you can repurpose, and sell it, at a discount. Somebody can then say it's Indonesian, Malaysian, Brunei, even Canadian oil. Remember, 5 million barrels so far this month have gone from Canada, and of those cargoes, 70% went to China. So, if, they could find crude that's similar to ours, and they can play the game and say it's Canadian.
If and when the Russia-Ukraine war ends, are energy prices likely to drop?
That's an interesting one because Russia, is, right now producing about 9.1 million barrels. I think capacity might be 9.5, 9.6. So if the war ended and Russia was able to sell they would get a higher price. It wouldn't be this $4 or $5 discount, so that's a positive that Russia would have. But in terms of volume increase to change the macro situation, I don't think they can do that. I also don't think Saudi Arabia can. They're 9.7, 9.8 million. Maybe they get to 10.1, 10.2. But even in 2008, they couldn't get over 10. They were able to, from field production, they were able to sell more because they had inventories globally and onshore and offshore and tankers. And that's the same thing now. There's 1 billion barrels floating around the world. So, to see a spike up here would require a geopolitical event, Straits of Malacca blockage, some event where an oil-producing country had a civil war like we've seen in Libya. I think that we're looking at no big change for Russia if they make more money, but they don't produce a lot more. And then India and China and others can buy their crude. And again, the question is, does Europe start buying it? And if Europe buys it, remember, you've got pipelines and everything there already. So they would be able to have, more supply choices, once a finalized peace arrangement is done. And the biggest thing is the rebuilding that's going to have to go on. Who's going to pay for it? Will Russia have a tag on their revenue sources where, yes, you can sell to, Europe, but you have to give, 10%, 20% into the rebuild fund. There's a lot of issues like that. And the same thing like we have for Gaza. Who's going to pay for it? Is it going to be, the United States, Israel? Is it going to be Turkey? Is it going to be the wealthy Arab countries? There's a lot of rebuilding having to go on. Remember, all of that's going to require energy as part of it. So you could argue the positive case, once there's peace, you could argue a very positive case that the rebuilding efforts are going to consume a lot more energy.
Could China's desire to take over Taiwan become a reality?
I believe before the end of the decade, something will happen to change the political situation where Taiwan either becomes a province. Remember, we saw Macau and we saw Hong Kong, switch over. I think something will happen, hopefully without a lot of casualties and not a war event. But I think it's pretty clear that Xi, during his tenure, wants Taiwan to return to the fold. Taiwan may not like it. But again, there are different political parties in Taiwan. Some are pro-Russia, pro-China. Some of them are pro-U.S. So again, it's not very clear even within Taiwan that there's, right now the government is wanting to be independent, spending money on defense. They have decent-sized military, but nowhere near what was needed, to fight off China. And again, from a logistics point of view, China, Taiwan is not very far. Remember the governor of Alaska said, "I can see Russia from here." Well, you definitely can see from China, Taiwan, or vice versa. The distance is not that far. There's a lot of little islands there. And I think those could be the flashpoints. If China takes over the small islands that are very close to the Chinese landmass, then and we've seen them, split, move over into the Philippines and Vietnam waters, trying to claim those as Chinese. If they go in and take some of those small islands that are part of the Taiwan, political system, that could be the trigger point to let you know that something's going to happen. Taiwan is going to have to decide, do they want to fight or do they want to work out some relationship with China that gives them autonomy, and still under a capitalist system. I think, China's view would be, look, the Americans are saying they're going to cut us off from software. They won't let us buy, NVIDIA chips or AMD chips, the newest ones. Maybe we just blockade or call it a quarantine. For some reason, health-wise, there's a COVID scare, that Taiwan's responsible for instead of Wuhan. And then they could say, hey, no planes are taking off, no planes going in, no ships going in, no ships going out, and effectively, take the world out of getting those chips that are made in Taiwan. And that could be a flashpoint in itself. But the Americans just don't have the military forces in the area to take the Chinese off. So, it's a question of, when does Xi want to pull the trigger? Because, the Americans are distracted by, what's going on in Ukraine, what's going on in the Middle East, what's going on with Venezuela, and they don't have enough military sources to be everywhere. The Roman Empire couldn't be everywhere. They might have had 30 or 40 legions, and they had to move them around where they needed them. Did they need them in Gaul? Did they need them in Germania? Or did they need them on the eastern border? In the end, the empire fell.
Canada is shipping a significant amount of crude to China. Could this be due to Communist Party influence in the Canadian government?
I don't think that's a case. I think, China's looking at wanting to diversify from just buying from Russia or Saudi Arabia. And they know that, Russia has limits, Saudi Arabia has limits. Canada right now is producing about 6.1 million barrels a day of liquid. So let's put that in context. The United States is 23.5, and they consume just over 20. So that's why they're exporting 3-4 million barrels a day to the world. Next on that would be 9.7, 9.8 Saudi Arabia. You go to Russia, 9.1, then Canada, 6.1, going to 6.2 next year, and then you go to China at 4.2. People don't realize we are a powerhouse, and with our reserves being the third largest in the world, we potentially could, if we had the infrastructure, move from 6 to 7 to 8 million barrels over the next decade or two. That's the wealth effect. And, we have the same thing in uranium and grain, forest products, all of these things, precious metals. Canada's a resource economy, as is Russia, as is Australia. And yes, we have, healthcare, and we have technology, and we have great universities, helping in AI. We did have, research in motion, and for a while there was Nortel as, trophy stories. But in the end, it goes down to, what's going to be the winners. And from an economic point of view, exports, job potential, all the rest of it, our resource economy is going to do it. And depending upon where you are, Quebec has resources, Ontario has resources, there's, Saskatchewan, of course, has energy plus, uranium and grain. So, the wealth effect of Canada in the next few years and next few decades, should go to resources, and help build a bigger pie to distribute that pie, maybe with a, left-wing bent from the government. But we need a bigger pie, balanced budgets, and that means Canada has to go back to its strengths, and our strengths are resources.
Could more quantitative easing lead to higher stock prices?
You got me on that one. There's too much liquidity in the system right now. There's a bubble in the stock market, in technology, and many other areas. I think we're risking a potential here for a bubble that could burst. In 1987, it was all over in a month. In 2020, it was 2020 during COVID, it was 2 months. 2008, it was more than a year. So I think that, because this bubble is bigger than some of the other ones, the question is, do we make dumb mistakes politically? And, the crash of 29 could have been just a stock market event, but then it turned into a political event, because of the bank crisis and bank failures and government not willing to do the things that were needed. And then, of course, Roosevelt came in and, he started, doing things like, saving the strong banks. The FDIC was created, and, government programs were created to help the unemployed. And again, so do we make dumb mistakes, or do we make good decisions after some kind of stock market event? But I would put a very high probability on a stock market event. And then the question is, do we have the right people in the right places? Did we learn enough from the others? And again, you can argue 2008, 2009, the governments did make the right decision with quantitative easing and with all the things they did to support the financial system, so it didn't crater. So again, it's only time will tell.
Geopolitics, could a United Kingdom model work for the U.S., Canada, and Greenland?
Well, I don't think many Canadians would, want to be involved in anything to do right now with the U.S. Given the differences of opinion we have on military and politics and government spending, tariffs, all that. And I don't think Greenland is yes, it's got potential resources and rare earths and other stuff. But again, the population is not in favor. Our population is definitely not in favor. And I think if you ask the Americans, to do a vote, do you want to be part with Canada and Greenland? I'm not sure you'd get the vote there either, except in MAGA land. So I'm not sure something like that will ever happen in my lifetime.
The U.S. dollar looks like it put in a double bottom in July and September. What would a rising U.S. dollar do to energy costs?
Historically, a stronger dollar would mean lower energy prices. Would mean higher energy prices because it's priced in U.S. dollars. Sorry, have to get that straight in my head. And so if the U.S. dollar strengthens, it means it's more expensive for other countries. And of course, there's more revenue coming into the companies and countries that have energy. So I think the U.S. dollar is higher. Higher oil prices would mean the currency of trade for energy is mostly U.S. dollars. You're seeing yuan trades now. Nobody wants rubles, so if there's an alternative, it's the yuan, the Chinese currency, but it's not freely tradable. So it's not really going to be a big number. The euro's, not really a player. So I think the U.S. dollar over time is the currency of reserve for the world, and everybody from the narco players want U.S. dollars. You see the pictures of the $100 and $1,000 bills in piles, and you just see that trade is still done in the strongest currency, and the SWIFT system clears U.S. dollars. So could the U.S. The only problem with the U.S. dollar is the budget deficits and the trade issues and the tariff issues, which are big, and that's why it went down 10%. But right now, I think with the geopolitical events, and if we see the tariff war end, I think you'd probably see the U.S. dollar strengthen, not going to 110, but could it get back to 105? I think that's probably realistic in 2026.
The Canadian dollar has been pulling back and might now be starting to show some strength. Are the Canadian dollar and U.S. dollar always inverse to one another?
Well, historically, if one goes up, the other goes down. I think that's been historically the thing, and we're sitting somewhere in 71 cents here. If the U.S. dollar rallies much, I think that means the Canadian dollar goes down. But if you remember, we were a petrocurrency, and so going back, 10, 15 years ago, the Canadian dollar traded at a premium, and that was because we had, resources doing well. Price of oil was very high. Natural gas was doing well. Forest products were doing well. And so we had a Canadian dollar at a premium. I remember in, 2005 traveling with a Canadian dollar at a premium, which was awesome. And of course now it's 140 on the other side of it. So, I think if we do have much higher energy prices, the Canadian dollar, as I said earlier, will strengthen. Will we get back to parity? I don't see it, not with our deficits and not with our left-wing politics. But could we, based on commodity prices, get into the 80s? That, to me, I think is very realistic before the end of the decade.
Could crude oil and natural gas be used to power AI data centers, and would it likely cause the price of energy to rise? And also something I heard during my recent trip to Alberta is that another key component to an AI data center is water to cool off all that equipment.
Well, water in cold weather. Yeah. So winters help here. I think that natural gas is the one that matters for AI. And so, we need to, that's why you're hearing more and more from the premier that they want the data centers, to create their own, natural gas fired power, or look at other alternatives, these small modular nuclear reactors that everybody talks about but are a long way away. So I think that natural gas, demand will pick up as we see more data centers come on in Canada and the States. But data centers need, as you said, water to cool them. And of course, a big part of our year, we won't have to not to worry about it so much because you have the cold weather, which is exactly what's needed for the data center. So, bottom line, I think natural gas benefits over time. Crude oil, it's more of a global commodity and doesn't get used in data centers, so it's not impacted.
I just saw today a headline saying Ontario and Canadian government commit $3 billion to modular nuclear.
Yeah, you're seeing every country around the world looking to find a way to have small modular reactors. Remember, the American military, because of U.S. nuclear submarines, already have small modular reactors. But how do you then take it from war use or military use to commercial applications? That's what's going on with a lot of these companies that are high flyers on the board and on the stock markets there, where they're saying we can have these small modular reactors ready in a couple of years. And of course, Meta and Facebook, and Microsoft and Google, Alphabet are all talking about if they can't do it with renewable power, sun, wind, all those, that they would go and go with small modular reactors. So they're all investing in every alternative because they know the amount of power requirements cannot be met by the grid today. And everybody is telling them, if you want to have a data center, find your own power, create your own power, use your own power for yourself, because this, we do not want households to face, if the price of gas goes from $3 an MCF to $10 an MCF because of data centers sucking up so much, then, your household bill is going to go up sharply, and then the utilities are going to be under pressure from consumers and politicians, and so nobody wants that. So, a price of $4, $5, $6 in winter and, $3 to $4 the rest of the year, the industry can make money on both sides of the border. And $10 natural gas during spikes of very cold weather have happened in the past and could probably happen again if inventories are low. But I don't think we want to see $10 on a consistent annual basis simply because of what that would do to the consumers, the populations on both sides of the border.
What's the latest on rig data?
Well, the data from last Friday showed that the U.S. rig count was down overall again 6.3% from 585 rigs to 548. That just fits with what's going on. If the economics don't justify it, and if it's not Tier 1 inventory with a quick payback short cycle, as they call it, then it's not going to work. Canada is down 8.8% from 217 rigs to 198. But if you go through the breakdown in the U.S., the gas rig count is up because of the increased 16, 17 BCF of LNG exports, 99 rigs to 121. But oil, because of the oil rig count, because of the soft prices, is at 418 rigs, down from 482, down 13.3% from a year ago. In Canada, our gas rig count is down 4.7%, 61 rigs versus 64, no big deal there. But the oil rig count is down over 11%, 11.1, from 153 rigs to 136 rigs. So we are seeing an impact in Canada and the States on the oil side because of the issues of low prices and the economics being not that attractive for the industry. And so most of them are trying to keep flat production as a goal and waiting for much higher prices to justify increasing their spending and growing production. It's in their benefit to leave the reserves in the ground and wait for higher prices and wait for Tier 2 inventory to become Tier 1 at 70 or 5 or 80 and Tier 3 inventory to move to Tier 1 at 90 or $100 oil. So I think the industry is feeling, let's build up our reserves, let's have our big drilling inventory, and let's wait for prices to get to a point where it justifies it, and we have the infrastructure to move it. So are we going to see more LNG plants on the West Coast? Yes. A number of them are moving through the system. Others are, started construction on top of LNG Canada. And then I think if there's long-term interest in another oil pipeline and First Nations jump in and Prince Rupert or whoever becomes the location, then of course you have the tanker ban. So I don't know when if it's going to happen in the next decade or so. But the TMX, as you saw in the articles today, they're fighting with the producers over tolls. The government's trying to get the highest tolls because they want to justify their investment in building the TMX. And of course, the companies say, "Look, we have alternatives. We can go rail. We can go other places south. We can go, And so we're not going to pay these crazy prices if it doesn't make economic sense compared to alternative transportation routes."
Do you have bullish and bearish outlooks for crude?
Yeah, it's based on the timeline. If you look at the near term, as you know, I've said I'm cautious. I think we go back below 60. But if you get into the second half of 26, I think we're going to be looking, as I said, $80 handle and, 70, 75 for the average for the year. But going out to 28, 29, 30, I think we're going to the 80, 90s and popping through 100 during periods of very tightness or strong demand. And that's going to be a very bullish outlook. And that's, as I said earlier, I think there's 5 and 10 baggers in the sector. You can find companies today trading at under 2 times cash flow, some less than that, 1.5, 1. The companies, will focus on strong balance sheets and in some cases paying dividends. And in other cases, just, being patient and waiting for prices to get back up. And then the capital markets provide them with capital to grow. But that's not happening right now, which means, patience is required. We've been telling people that there's some great stories out there. We always, on our SCR, reports, we have the action buy list, and we talk about what prices the stocks are attractive at, and then every issue we talk about top picks. And right now, because we're looking for downside, we only had in the last issue 2 names out of the 5 groups that were attractive. And so if we see downside, we may even have less in our next issue. Our next issue is November 6th, coming out to subscribers on November 13th. And the big thing for us is we're going to have our quarterly webinar on November 27th. So to become a subscriber, you can then come on that webinar or listen afterwards. It's 90 minutes, usually on a Thursday night, so from 7 o'clock to 8:30. And there's 2 question and answer periods, so subscribers can send in a text to us, and we'll answer those questions. We do not give recommendations to individual investors on what's right for them because of the Know Your Client rule, but we'll talk about why we like or dislike any specific company and what we think is a good price to buy it at and where we think it might go. But then the individual has to get individual investor advice from their investment advisor to decide what's appropriate for their individual needs under that Know Your Client rule.
Overall, do you think 2026 will be a good year for energy?
Clear, yes. Big letters, YES. I think it's going to be a home run year. I think it's going to be one of the better years coming out of the sector like we did in 2020 after the end of COVID. The recovery into late 2021 was awesome. We had a lot of 10 baggers during then. If people can just go to the charts and look at any name that they want, be it a Tourmaline, be it an ARC, be it a Trican in the service sector. There were fabulous returns from the group. I don't see it as powerful as that, but if you go to April of 2025 and look what happened, from April to now, we've had a lot of stocks that have doubled. So I think 2026 is going to be a very, very good year. And investors should make sure that they have some exposure to energy, depending upon where they are. People in Alberta have a higher tolerance for and want a higher percentage of their portfolios in energy. And as I said, you can get paid well while you're waiting. 7-8% dividend yields on good companies. So and some higher. So to me, it's a wonderful place to be and buy on the dips, and we expect we'll have another buy signal like we had in April of 25, sometime during December. And if that's the case, then we would recommend investors go to whatever 100% weighting is for you. It might be 5% because you live in Eastern Canada. It might be 20% if you live in Alberta. Again, each person will have to decide with their advisor what's appropriate for them.
Where can our listeners subscribe to the Schachter.Energy report?
Yeah, as I said at the beginning, go to www.Schachter.EnergyReport.ca. Schachter is spelled Schachter, so www.Schachter.EnergyReport.ca. On the top, you'll see where subscriptions are. Click on that. There's a quarterly subscription choice, but the annual is the one between now and October 31st, where you can save $150. This is what we do for our annual conference. It's the best deal we offer every year during the conference windows. Other times when we have offerings, it's usually $100 off, and it's not too many times in the year that we do that. But then when you fill out all the information, there's a promo code there. Put in the capital letters BGA and then 25, so five letters and numbers, BGA 25, and you'll get the $150 off. And we'd love to have people become subscribers. We think we have a pretty awesome product. We've been, as you know from our discussions, we've called the commodity call very well, and we've also called when bargains were there, as they were in April of this year, and in 2020, we came up with stocks that did exceedingly well. It wasn't us that did it; the companies did it, and higher commodity prices did it. But we pointed people in the direction of names that they could take a look at and see what's appropriate for them and take advantage of it. And we ourselves, here, my family intend to put our capital to work when we get this next buy signal. And for whatever weighting, which is for us even higher maybe than what most Albertans would do, we would probably go to 100% weighting to our energy target level during that buy signal when it comes. My view would be sometime in the first few weeks of December.
Joseph, thank you so much for being on This Week in Money.
Always a pleasure to be with you, Jim.
My guest has been Josef Schachter, founder of the Schachter.Energy report. He was speaking to us from Calgary. Coming up, Allan Angell, next on This Week in Money.
Always consult your investment professional before making any investment decision. In Money is archived online at talkdigitalnetwork.com.
Welcome back. My guest is Allan Angell. He's probably one of Canada's very top or near the top real estate agents over the past few decades. He's sold more than 4,000 properties. He's located in West Vancouver, BC, Canada, online at theangellgroup.com, the ANGELL group.com. Allan, welcome back to This Week in Money.
I thank you kindly.
President Trump terminated trade talks with Canada Thursday evening. Could this have a psychological effect on the real estate market, especially in Greater Vancouver and where you are, the wealthiest community in Canada?
Well, I'll answer that question. I want to do a little bit of a history, little lesson to start this, but it goes into giving an answer for that question. Mm-hmm. Basically, I've been a realtor for years. The 1980, the MLS started. And then by 1984, it was going strong. So all my stats I use, basically, most of them start, 3 start in the 80s. All the rest start from at least 1991. So right now, the market, everybody asks you, well, why are my stats different from the board stats, the MLS board stats? And I said, well, they're the same stats, but I just do them the proper way. Give it what the market is doing right now. The worst year in real estate history is 218. Now, 1980 we had the interest rates and all that, but we didn't have the MLS wasn't strong enough, so we didn't know the exact stats. But so since say 1984, the worst year is 218. But the amazing thing, the government always steps in and screws it all up. The government is just, honestly, I'm just not a fan of any government at all. The way the market's going in the lower mainland now, and I do 14 areas, Greater Vancouver, Langley, Abbotsford, White Frog, Maple Ridge, Tri-Cities, and then all the ones in town. From 2022, they changed the law about no foreign buyers. The market, that was the end of our market. So since 2022, 22, 23, 24, and 25. We've just had the 4 worst years in a row. So 2018 is the worst year, but those are the 2nd, 3rd, 4th, and 5th. That's why just about every area is exactly the same. So the government has just, if you own a house, you can figure out your house has gone down 10 to 25%. I'll give you a couple of examples. I sold a very nice apartment, waterfront apartment, in November for $2,050,000, and then the same building, the same floor, 15th floor, but the other end of the building. The one I sold first looked west. This one looked towards the Lionsgate Bridge, so it didn't have the heated sun. I sold that for $1.5, so $550,000 less for the same waterfront apartment. I'm trying to do a deal on a place right now. The guy bought it in 2022 for 2.3. We're now asking $1,770. That's how much the market is going through the change. Now, most realtors would tell you the market is slower, but none of them, except about 5 or 6 who I've taught, none of them do the stats the right way. I'll give you the best example I can. As the first of the month, October the 1st, they say, here's the sales for last month. Well, so they put out the sales for September. Now, the trouble with that, I don't finalize my sales for September until about October 21st, because all these deals, there's so many that are subject to next month. So I do that, but it takes me 20 hours a week to do all the areas. No other realtor will spend 20 hours doing that. And how important that is, West Vancouver, December, the average sales in December are 33 sales. They announced 31 sales in December on the 1st. So I said, okay, I looked at all the sales. Only 17 happened in December. 17, 48% less. That's how far off they were on the proper sale. All the other ones were done in October, November, but handed in December. If you want to be a top realtor, you've got to know what the sales are doing today, not last month or 2 months ago. My sales are exactly right, and I'm the only one who spent. Some guys do 1 area, 2 areas. I do 14 areas in the lower mainland. So we're just fighting the 4 worst years. 2022, 3, 4, and 5 is probably going to be this. Looked like it had a chance to be the worst year of all time, but it's going to probably just beat the worst year. So it'll be 4 in a row, 2nd, 3rd, 4th, and 5th. That's what the market is doing right now. So when last August in 2024, of the 14 areas, 9 of them were having the first 8 months in history. 9 were having the worst 8 months I'd ever seen. So it looked like that was going to be the worst year. 2 things happened. Trudeau resigned. Trump got in power. The market changed. By the end of December, we only had 3 having their worst year instead of 9. So I started the year thinking, this is going to be a good year. I had an open house on a $5 million apartment at the end of January and the first week of February. I had 17 good groups through 1 weekend, 16 the next. Never in my career have I had that. So I said I was quite optimistic about the year. Then Trump put on the tariffs. The world, it ended. That was it. So yes, Trump is making deals with every country in the world except for us. And I thought, if Trump and Carney can't come to terms, the market will change. That's what I was expecting. But Trump just cut the trade deals off yesterday. No trading with Canada, the hell with them. And so this is going to keep the market where it's going for sure. How the people could, after Trudeau and the Liberals destroyed the country, just like Biden and his group did down there in the States, how they could vote the Liberals back in, I have no idea. But they do. People just vote one way their whole life, it seems. They don't think and change, or they don't know all the facts. So our market is such that these last 4 years are going to be the 2nd, 3rd, 4th, and 5th, just about in every area in the lower mainland. I'll give you a couple of examples here. Burnaby's 3 areas, there's 367 sales this year to the end of September. The worst year ever was 455. Richmond, 485 now, 520 in the worst year. White Rock 480, the worst year was 585. So it's the same in all the areas. So that is what is going on. So the market is not going to change very much at all, because the Liberals aren't making they're not making terms with Trump. So it's going to continue on. I thought it might change, but it absolutely won't. So yes, trade drops are going to prevent the market. The market has just started to improve. The last couple of months, the early months of the year were really bad, but the market has just started to improve. In fact, West Vancouver and North Vancouver, every area was having the worst year. All 14 were the worst years of all time, but West Vancouver and North Vancouver now have just moved above the worst year. Now it's only slightly. North Vancouver is 554, the worst is 548, and West Van's 286, and the worst is 259. But there are at least two areas that have moved above the worst. Now we'll see what happens now with unless the trade things are happening. So yes, it's going to be I shouldn't say a huge effect, but it will maintain the fall in the market. No question about it at all.
An elephant just showed up in the room of real estate in British Columbia, and for that matter, Canada. That land could be subject to Aboriginal title. A new provincial political party in British Columbia, One BC, which has two MLAs, Dallas Brody and Tara Armstrong. They're shining lights on this subject, along with other issues, during this fall sitting of the BC legislature. If land titles are in question, at least for a period of time, why would anyone buy real estate in BC or even Canada?
Well, you're absolutely right. I don't expect that will happen, because there's always things like this happening all the time. I can't imagine that would absolutely destroy our market. Our real estate here is so expensive. The reason my partner and I expanded the company by 6 offices, because West Vancouver, as I said, we have like 400, counting houses and apartments, we have 448 sales for the whole year, both, and there's 785 realtors. Last 2 years, we've sold less than one house, a realtor a year. That's how bad it is. So if something like this happens, you're right. There's no reason to buy unless you're totally convinced your lots and your land are going to be safe. It would be a total disaster, but I can't imagine it happening. We just got to get the government fixed. It's people. I can understand why they want to lower the prices. Houses are too expensive, but the market's been going down now for 4 straight years, and the houses are still too expensive. I'll give you an example. I sold a house for $30 million here, and I have a house down in California for sale. I can't list down there, but I can work with a realtor, so I share it with the realtor. I put it on for $16.9, and I would think I like that house more than the one I've sold for $30 here. It's amazing how expensive it is, but it's never going to get to the point where people are going to be, the young people nowadays, you can buy a house in Abbotsford, Maple Ridge, and things like that for $1 million, which isn't bad at all, but it's never going to get to the point where it will be. But if this thing went through, it might chop the prices in half. So maybe that would be a good thing for the people who couldn't afford a house, but all the homeowners now would be suicidal.
Former Liberal Prime Minister Justin Trudeau might have said, "You will own nothing and be happy," a slogan that's from the World Economic Forum. How would you own nothing? Most people's wealth is in real estate.
It is, but if things like that go through, the Indians get the land back.
Yeah.
Well, then you're not going to own a damn thing. I just can't understand why we elect a government like Trudeau's or Carney's and things. It absolutely boggles the mind. Most people don't like Trump. I know when he ran the first time, I thought it was a joke. I thought, well, he'll be out of the race in 2 weeks. And now the things he's doing down there, he's making deals with every country, he's stopping wars, making deals with every country in the world except us, it seems. So we got to make a deal with the states because they are the neighbors, and if we want the economy to improve, I mean, think it's terrible now. I mean, everybody's short of money. Everybody is. We're losing so many realtors in the business because there's no deals.
Are people in the real estate industry starting to talk about the Aboriginal title deal and possible solutions?
Well, no, because I haven't talked to the people I deal with. I don't think they were worried about that. My people, a lot of high end people, and I don't think they're concerned about it. They think it's just the same old thing that happens. There's talk about something all the time. I haven't heard anybody mention it to me at all.
Could land titles being in question for the entire country cause real estate prices to crash?
Oh, absolutely. And you think of it, we are so high that they would have so far to go. They would have so far to go down. And that's the scary thing, because Canada is a great place to live. But when I look at places, I can buy cheaper places in Palm Desert and Rodeo Drive area, Hawaii, than I can buy here. It's insane. So no, we can't afford that. But people vote. Look what's going on in New York. They could have a communist mayor there. That what used to be the greatest city in the world is just going downhill beyond belief. I mean, I cannot believe that the system obviously doesn't work, because I find most people just, I vote, I'm a liberal, and that's what they vote all the time. They won't change. I look back when Pierre Trudeau was in there, and he changed the immigration policies, and it was a big change to the country. I have a family that's now part of my family. They're getting married to my son. They came over from South Africa, and they have voted for Liberal, ever since. Never seemed to change. That's what the Democrats have put. They put 20 million people in there trying to get them to vote, so Republicans will never win an election again. I mean, I just can't get over how we can destroy our country so fast.
How was the summer market for sales and listings in Greater Vancouver?
Well, I'll give you an example here. How many houses were on the market? This is Greater Vancouver, the whole total. Okay. As of the end of September, there were 6,459 houses for sale. The lowest year ever is 3729. The highest is 99. The average is 6401. So basically, the total right now is just slightly above the average. It's 58 sales above the average. So really, it hasn't changed that much. West Van, on the other hand, the average is 464. We're at 578 for September, which is an alta for all my years. That's the highest listings we've ever had in September. So Greater Vancouver, it stays the same, but certain areas are extremely high.
How were sales through the end of September 25 compared to other years for Greater Vancouver?
Well, it's interesting. So my sales, like Greater Van, the end of in September, 5212. Last year was the second worst year ever. They were 5914, so we're 700 sales below. You look at Vancouver West, 477. Last year they were at 690. Vancouver East, 596. The Vancouver West, 623 compared to 477. Vancouver East, 690 last year compared to 596. So all areas are lower this year than they were last year.
How are the months of inventory and sales for high-end West Vancouver properties?
Well, this is interesting because I check the high ends in West Van, but I also check them in Vancouver West. I mean, I spend 20 hours a week doing this because it's in my blood. Right now in West Van, there's 40 listings over 10 million. This year we have sold 6. 40 including listings over 10 million, we've sold 6. The average per year is 6, 5.8. It's 6. So right now we're having an average year. Very interesting, Vancouver West. They have 61 active listings over 10 million. They have sold 4 the whole year. So they've sold 4. The average is over 18 a year, and they've sold 4. So Vancouver West market is terrible.
How are the months of inventory for West Vancouver waterfront properties, and how are they selling?
Well, the ocean fronts, we've sold. I think just let me get my sheet here. The ocean fronts, we've sold 7. The average per year is 17. But the last few years, like last year was 6, the year before that was 6, the year before that was 7. So we used to sell like 17, 16, 15, 18. But now in the last 4 we've been 5 to 7. So they're down. Now they're averaging 6 a say, and the average is 17. So they're down. And how many are for sale? There's 29 for sale. So and we've sold 7. So we're still having sales, but as I said, it's just slower.
How is the condo market doing, and especially high-end condos?
Well, the condo market is quite strange. If you look at I do 4 areas in the condo market: Greater Vancouver, West Van, North Van, Vancouver West. Okay, and there, Greater Vancouver, the average year Greater Vancouver is 13,926. They're at 13,230. The worst is 6,700. So all 4 areas are very close to the average year, way above the worst year. The condo market is much stronger than the housing market. The high end is we've had 4. We've had 4 over 5 million. Okay, and last year we had 9. But to go back to 3 years previous to that, we had 1, 3, and 6. So really, last year was the best year for the high-end apartments, 9 over 5 million. Every other year, I think the highest is 6, and right now we're at 4. So we're still holding our own.
Are offers to buy homes with subjects slowing the sales of homes?
Well, no, it's normal. I would think that because everybody, especially in the last 4 years, nobody can buy a house without their house being sold. So normally they can make an offer subject to a sale of their house, but the problem with that is that if I have a listing and somebody brings me an offer subject to a sale of, I say, well, there's no guarantee the house was on. Normally I wouldn't take them at all, but some of the houses have been on a year or so, and so you say, okay, well, let's try that and see what happens. You put a 72-hour, or 48-hour, 72-hour escape clause, so if some other offer comes in, the people have to remove the clause. But no, you have to make it subject to sale of, or you have to sell your house with a long completion date so you have time to buy. It's just normal conditions given the horrible state of the market.
Are homes being listed for sale above or below the latest BC assessment valuations?
Well, it's interesting. It's 50-50. 4 years ago, just about every house sold below assessment. And all of a sudden, it went the other way. They were selling above. Now they're 50-50. Half the houses are going below and half are going above.
Are West Vancouver demographics continuing to change?
No, it's quite stable because we don't have the foreign buyers and things, so it's quite stable. The only thing that difference is that we have 3 cultures here. We have the Persian Iranian culture, we have the Chinese, and we have the Caucasian. Those are the biggest 3. Several years ago, the ratio was a third, and a third in West Van. Because what I do, I don't check every sale, but what I do, I look at the realtor who sold it. If it was a Caucasian realtor, it was probably a Caucasian buyer, Iranian, probably Iranian. So, but now, last year, Caucasians were 52%. So we don't have the influx of the foreign buyers. So that's where it is now. But it varies where you are. Out west, Horseshoe Bay, Caulfield, it's 78% Caucasian. But you go to Chartwell or the BP, it's the other way around.
Are you hearing of people selling their high-end properties around Vancouver and moving out of Canada due to the governments of the day?
No, I haven't. I haven't heard. I haven't had one client who talked about doing that. I have a couple that had complained about ICE, that they were driving in Palm Springs with her, and they were stopped because they had a Canadian plate on. I guess ICE is just stopping people and saying that, prove to us you live in Canada and you have a passport. So, but that's only happened a couple of times. It's just Trump's trying to get rid of as many of the foreigners, that there's so many bad ones. And honestly, I've been expecting a total disaster in the States, just like 9/11 or something. There's all these people that they allowed in the country. But no, I'm not unaware of anybody, because where would you move to? I mean, I like the States. I have a waterfront place in Hawaii, and that my partner has one house on Rodeo Drive. But I mean, you can't move to California. California is totally destroyed. And I mean, San Francisco, I used to go to San Francisco a lot. I wouldn't go close to San Francisco now. So there's no place, and Europe has gone to hell too. So where do you move to?
The Bank of Canada's next meeting is October 29th. Expectations are we'll see another 0.25% rate cut. Would a 0.25% cut mean much for home affordability? Well,
see, there's a lot of people who want to buy out there, because I own opens now. A lot of opens now, because I look after my wife, but I can go for a couple hours to have opens or to see clients or go to the office. But I think that's a very positive, because people are dying to buy. I see it all the time at opens, but they're just nervous. They were waiting for Trump and Carney to get the trade deal settled, so they would feel confident about that. Now that won't happen, so that's going to extend it. But maybe the rate it'll stay the same, because of the rate will help.
Currently, are the banks loose or tight with their mortgage lending?
Oh, they're still tight. I got a little apartment, the cheapest two-bedroom apartment in West Vancouver, and had listed for 1,100 square feet. Had it listed for $729. Had it sold twice, and both deals collapsed. They couldn't get it.
Are sales likely to continue to drop as we head into winter? And what happens to price if someone has to really, really sell? Well,
the problem is there are people that really have to sell. Like this guy, I mean, he bought it for $2.3. He's down to $770. It's basically a bank foreclosure, so it has to sell. It's a great buy. I see houses now that there was a listing on last year for 8.8. It's now down to under 5. There's a few people that have to sell, so those deals lower the price of houses. But most people don't have to sell, so that's why we haven't had. When you look back in 2018, when I knew the market was going to crash, I had sold a house. I had sold a house for $30 million, and the guy only had it for 2 years and made 17, and that was before it's 218. So I knew the market had to crash. I had a guy I sold a house to, American, for 6.2, brand new house, a 2-year contract. A year and a half, I bought him an offer on it. Some woman had seen it when it was new, and she wanted to buy it. I bought him an offer 8.9. He had bought it for 6.2. No subby deal. I said, look at Alex. This you have to take. He said, I got 6 months. I can't move. Unfortunately, she's got to have the house. He has no place to go. He turned it down. So waited 6 months to put the house on the market. I sold it 4 months later, 4 to 5 months, 4.6. That's how much it can change. But now we haven't had that crash because money laundering is playing a large part in the Vancouver. And I've never had one in my life. We had one a while ago. Somebody wanted to buy a house from Ottawa, wanted to pay. They asked him, it's $11,999. He said, just write the offer up, I'll buy it. And my guy said, well, what, you haven't seen it? I said, I don't need to see it, I'll buy it. Are you going to fly out and see it? No. I says, well, you're overpaying for it. He says, I don't care. So my guy didn't do it because that was obviously a money law. But that's the only one I've heard of. So I don't see that. I was surprised. The guy there's a specialist who knows about money laundering, and he got a hold of me because he knows my manager, and he got a hold of me, and he says, well, what percentage of houses are you thinking are money laundering? I said, I don't know, 2-3%. He laughed. He said, 30% in the Vancouver area. 30%. What are you talking about? But all of a sudden, that made sense to me because with the 4 years we've had, these houses should have gone from 12 to 8 to 10 to $7 million like they have in the past. This hasn't happened. There's a few of them that are going down because they have to sell. But the overall, if you don't have to sell, you can just sit tight and wait. But that makes sense because they always buy the expensive houses. So the few sales that we have haven't dropped $5 million. They're $1 million, $1.5 million less out of the asking. So they have kept the market up. And so we haven't had that major crash. If that stopped, there's a good chance we will have one. But, it's easy to talk about the market, how poor it is right now. But there's one thing I've always realized is that, yes, the market's soft right now, very soft. But you're going to get less, but you're buying for less. So basically, it's like when the market's good, you sell for more and you pay more. It's the same thing. It doesn't really change that much. If I sell my house now for $2 million and it used to be $3 million, I'm going to be buying a house $1 million less. So it doesn't really. You can't be that negative about the market because it's an even trade. But yes, you can worry about world wars or something like that, or the government. Government, I honestly, a bunch of average guys, average intelligent, they get elected and the power goes to their head. Our real estate's controlled by the government now. Since they've done that, they make changes all the time because they have to sit there. That's what they do. They find there hasn't been one change that I think has helped us. Not one. All it is more work, so many more pages. And I used to laugh. The Americans had so many pages in an intro, we hardly had any. So now, even I have sold all these few thousand houses. I'm nervous about writing up a deal now because they change it every 2 months. They change something. It's insane. The government should back off, stay away. Everything should be a private enterprise as far as I'm concerned because these guys don't know what they are doing in every industry. I'm quite convinced that the vaccines in back a few years ago, this doctor said don't take them. And I thought, well, but never. The government said you have to. You may lose your job. That's insane. Now we're finding out because this doctor I did deal with because my wife's ill, and cancer is up 40% since then. That's what he told us then. It's going to go up, and it is. And every medical board is trying to stop him. He was just on a podcast in the States, and every medical board does something because really the government told us to take this, and they were wrong. There should be a class action suit against the government, and they should be bankrupt. So that's the way the world is right now.
Are a number of realtors leaving the industry?
Yes, it's scary. It's absolutely scary. We've been lucky in my main office. I have 97 realtors there. I haven't lost any because ours is they're very high end. I sell a lot. I used to sell just all line houses. Now I don't care. I can sell a house for $700 to $600. I don't care. I just like to do the deals. But we have the 6 new offices. One of them is closed down, but I think we've lost about 15, 16 people, which isn't a great deal because most people like the Angell has been in because we're probably the biggest company in Canada in the high end houses, and my staff stay in there. We're loaning them money just to keep themselves alive, and but it is tough. the guys I talked to, I bumped into a guy who used to work for the other day. He hasn't sold a house all year, but think of it, 448 sales totally for 795 realtors. And there's always a few who do very well. When I became the number one realtor in 1980, I sold 91 houses. 91 houses, which was huge in those days. Monstrous. It'd be like probably 200 today. And then 1981, the interest rates, the market crashed. By March of that year, I was third in my office in West Vancouver, third in my office of 22. I said, how could I be the number one realtor? And now I'm third in my office. But I changed my strategy because I realized what was going on. By the end of the year, I was number one in Canada again. But you just have to be prepared for that. One of the things you have to do as a homeowner, you know, homeowners make mistakes. Well, my friend has a son or daughter, just so I'll use them. This is your biggest investment in your life. This market is probably, well, not probably, it's the worst, four worst year. We've never had more than one bad year, then picks up the next year. This is 4 in a row. Your realtor has to know what they're doing. That's why I spend 20 hours on stats. Like, if anybody lives in Maple Ridge or somewhere else I don't know, call me and I'll tell you exactly how many sales are in your area, what the market's doing. Because if the realtors had the stats that I do, you go in, you have 4 agents in your house. The guy that offers you the most, you give him the house. If you have my stats that I use, and it shows you're in Maple Ridge, and this is the worst year in history, you're not going to pick the guy with the highest price. You're going to pick the guy with the most knowledge. So anybody out there who lives in any of these areas, my number is easy, 778-888-7474. Call me and I'll tell you exactly how many sales, because your realtor will not know. He'll know the market's bad, but they don't know how bad it is. You're a realtor trying to close a deal. If I point to you, I had to drop a price in the house in the British properties. And she says, well, why is it so bad in West Vancouver? My 2 best friends, one lives in Burnaby, one's in Richmond. They say the market's not bad at all. I said, well, here are the stats. They're having the worst year in history because the realtors don't do this work. And I can understand 20 hours a week. I'm a nutcase. I love doing my stats. I asked myself 2 years ago, would I rather golf at Capilano? I joined Cap years ago. I was an 8 handicap. Now I think about 19. But I said, would I rather golf or do my stats? I think I like doing my stats more. But I'm unusual. But this is the time you have to choose the right realtors. I just got a house from North Vancouver a week ago, and give you an example. She had it on all last year. Nothing happened. So I put it on. I dropped the price $30,000. I've had it for 10, 11 days. I've already had 2 offers on the house. 2 offers on the house. So the realtor is so important that you choose. If they don't know, call me and I'll tell you how many sales. And if they don't know what the figures are, don't use that realtor.
Do you think homes are in a buyer's or seller's market?
No, it's a buyer's market. Not all of them, because some people, they don't have to sell. Like I say, well, I know you tell me it's not worth it. I'm sure you're right, but I'll only sell if I get that price.
Where can people follow you and contact you?
Well, probably just use my Allan Mark Angell, ALLANMARK, Angell, ANGELL, @gmail.com, or call my cell number 778-888-7474. I'm a chatty Cathy, even though when I was young I started so badly I couldn't even say my name. I still love talking to people, and because I love this, but people need, well, one of the reasons I still work, there's a lot of older people who are selling, and they're taken advantage of. And so I deal with a lot of older people because this is what is going on. They got to be protected.
Allan, thank you so much for being on This Week in Money.
Jim, I thank you. I enjoy this a lot. Take care.
You too.
Bye-bye.
My guest has been Allan Mark Angell, one of Canada's very best realtors. He has sold more than 4,000 properties. His website, theangelgroup.com. And that wraps up our show for this week. We'd like to thank our guests, Ross Clark, Rick Ackerman, Josef Schachter, and Allan Angell. And thank you for listening. If you have any questions for the show or for any of our guests, you can send them to info@HoweStreet.com. I'm Jim Goddard. We'll be back next week with more This Week in Money.
Comments made on This Week in Money are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at TalkDigitalNetwork.com. This Week in Money is a production of Howe Street Media Incorporated. Executive producer is Tom Allen.